Get your free copy of the complete tutorial at www.teachucomp.com/free.
A paper trail, audit trail, and audit report are three very important things that every business needs to know about. There is often confusion about the definitions of these terms and their purpose. A paper trail is the physical support for the entries made in your accounting system. All the entries made in your books need to be backed up by some type of documentation. This may include bill stubs, receipts, invoices, purchase orders, and other types of supporting documentation. There are many reasons to keep a paper trail. If you are audited by the IRS or if you perform internal audits, you will need proof of where your entries came from. When you file your taxes, your accountant or tax preparer may ask for supporting documentation for entries made. If something goes wrong with the computer that contains your accounting data, or if you have simply found an error, having a paper trail can make it easier to go back and recreate or fix transactions. You need a good accounting system for keeping your paper trail. You can start by keeping a list of every transaction you make. Update this list monthly. Examine entries made into accounts payable and ensure that the total equals the accounts payable balance on the balance sheet for that period. You can also list customer deposits, accounts receivable entries, and all your assets. Keep good supporting documentation for your income and expenses. It's not nearly as intimidating as it sounds, and it will save you from huge headaches later. After you have entered your transactions and recorded them in your list, file the receipts, deposit slips, order forms, canceled checks, and all other types of documentation in a filing system that is easy to understand and which you can access quickly if necessary. If you are using computer software like QuickBooks or Peachtree in order to keep your books, you will want to understand audit trails. An audit trail is a record which shows who has accessed transaction data and when it was accessed. It also tracks what changes or new entries they have made. Audit trails are useful for maintaining security and for recovering transaction data. Most accounting systems include an audit trail component. In addition, you can purchase separate audit trail software that enable network administrators to monitor transaction entry. If you are the only one performing data entry, then there is less of a need to set up an audit trail as you would be the only one making entries. However, the more people you have working with your books, the more critical this part becomes. Hopefully, you will never need to use an audit trail, but it is a good tool to have in place. When you perform an audit of your books, the resultant report is called an audit report. Generally, the report will include a statement of the scope of the audit, an explanation for any comments concerning exceptions from generally accepted accounting principles, any expressions or disclaimers of opinions of the auditor, explanation for any comments concerning verification procedures, complete financial statements and schedules, statistical tables, and supplementary comments and recommendations. There are a number of reasons you may need an audit report. If your company has shareholders or a board of directors, a yearly audit will need to be provided to them. Of course, you may also be audited by the IRS. The IRS may audit you if some of the numbers that you reported on your tax return are flagged as suspect. Or it could be if your business name came up for audit through a random drawing. Each year, the IRS takes a random sample of businesses and individuals to audit. An independent CPA or certified public accountant must be hired to go through all the business's financial records to create the audit report. The audit report expresses an opinion about whether or not the financial statements of the business present the company's financial position accurately. They will also look at the operating results and cash flows to make sure they are in accordance with the generally accepted accounting principles. If you keep good books and have your supporting documentation in order, being audited should not be cause for concern.
Like what you see? Pick up your free copy of the complete tutorial at www.teachucomp.com/free.